Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky. And we have Scott Red Dog Redler on the line, Chief Strategist at T3 Live and T3 Trading Group. Scott, how was the long weekend?
Long weekend was great. It's always good to have a nice long weekend with friends and family, a little fitness, and recharge those batteries. And I love July 4th. I love fireworks. It's a lot of fun.
So did you kind of keep one eye on the market there? The SPOOs on Friday, they were open till noon, just a little bit, because I'm looking at that high at 71.75, and I'm thinking, man, when did you get a chance to sell the close? And that was early on Friday, and then you get the 6 o'clock open. Do you pay any attention to that, or do you just try and say, hey, whatever happens in the morning, I'll be prepared for? Or when there's news like this, do you like to keep an eye on that 6 o'clock open?
Well, I don't let it control my weekend, and that's what I think on Friday I tweeted out. I said, if you're going to go out long, make sure you're comfortable enough that it doesn't control your weekend. It's the same thing. If you go out short, just make sure that you're comfortable and you're not trading above your means. But whenever you have such a highly focused event like you had with the vote, you got to watch it a little bit because you need to see where things open, to see where they could potentially go the next day, et cetera, et cetera. Obviously, things were a little bit more drastic and severe on Sunday at 6 o'clock or 6:30 versus the morning. So, the question is, which as a trader coming in the morning, do we test those overnight lows, or was that the opportunity to buy that dip, and can we potentially go green today? So there's so many scenarios I have in my head. So, we could start going over them, I guess. With one of them now, which makes it a little easier, is that the S&P is above the 200-day, which is 2,054-ish. So at least we have that as the pivot. So if we're going to revisit the overnight lows, we're going to have to break and hold below 2,054 for, I would say 5 to 10 minutes versus just, trying to test it and then bouncing off of it. So I think at least we have that pivot to trade against, in the first, 30 to 60 minutes, depending on, the initial trade.
So you're talking basis the S&P cash then, correct?
Yes, you could do S&P cash, 2056. You could, if you trade the spiders, do 205.40. That is the spot that I'm sure people are long last week and they said, okay, I'm going to be, risk averse. I bought the dip, but I'm going to give it to, 205.33. Actually, that's the pivot. That's like the battleground, because below it, some people probably get stopped out of some positions. Above it, people try and stay with it. So the question is, does it stay above that, or does it go below it and close below it, or does it do a red dog reversal where it goes below, stops out some longs, gets some shorts in there, and then comes back above it and then tries to go again. So those are like the three thoughts I have in my head as far as the S&P.
Yeah, I mean, we're 20 points above the pre-market low. I mean, that's pretty substantial. They'd really have to, trade a lot to get it back down there. For me, I'm still keeping an eye, even though we traded down in the pre-market. I think traders should be aware that the 3 and 4 day lows are 50 cents apart from each other at 46.75 to 47 and a quarter. So that's something where we can see that's the first area of support that I'm looking at. Well, Scott, let's move on here to some individual issues. And I saw that you had a disclosure that you had some Yelp calls in your portfolio here. I hope that you put those on recently.
I didn't. I actually put the Yelp calls on in early May, when you had that big spike up saying they were putting themselves up for sale. After being involved in Altura and some of the other deals, I was like, you know what, I hate the way Yelp trades, but if there is a deal, I want to be involved. So I bought the August, I'm not sure what strike, I think 50s or 55s, and I said, I'm willing to risk this, because if there's a deal, you know what, I want to be involved, and I'll be more upset that I wasn't involved, but I'm not going to sit in the stock because the stock is broken, and I'm not trading a stock just for a takeover. So whenever I have some kind of calls on, a few months out, it means there might be something that happens, but you never trade something just for that, unless technically it looks good. So, the Yelp calls will most likely be a zero, and, that's my process with trying to play a takeover. It could have been a lot worse if I just sat in the stock and broke all my rules. So at least risk is premium paid when you're trying to, do something like that doesn't necessarily happen often.
Have you made any trading or maybe any moves in these acquisitions? You had CNC taking over Health Tech on Friday, and they just bidding these stocks up with reckless abandon and then giving a lot of it back. Have you been fading some of these companies that have been doing acquisition and just getting these ridiculous price movements?
I haven't, but some traders have, and that's sometimes their game. But for me, I don't really know what's behind it. So, whenever there's an acquisition, some people always just short the acquisition company. But for a while there, the acquisition companies were going up with the company they were acquiring. So it's a different game depending on the time of year it's happening or even the sector. But that's just not my thing. I like to know a little bit more about what I'm trading versus just fading the open on.
Mm-hmm.
But sometimes you could do it on overexcitement. Listen, if it's some things are up on a deal and things come off the high and you want to trade versus that high and use it to calculate stop, that's fine. There are a lot of guys that make a living that way. For me, it's not. It's not my bread and butter.
It's not in your game plan. Oil. Is oil in your game plan today? Really taking it on the chin today. Down $2.50. We were down over $3 in the day. How do you play the oil? Do you play the futures? Do you like to play the USO? How do you try and tame this oil market?
Well, some people here, trade the actual 2 times and 3 times ETF. I typically don't trade that often, but when there's an inflection point, I like to trade the USO. You just have to trade a lot of it to actually make some money. Recently, we were talking about 2080 as resistance. Some guys were shorting versus that on the USO, or they waited for it to break below the moving averages below 1990. So, if that's you, congratulations. And I feel like this morning, if you're not in oil, which I'm not, I'm going to see if I could trade it perhaps versus 18ish. 18ish to me is some support back from early April. Just a small trade, just to see, in a sea of red, when you have futures down like this, you want to try a few different things. You want to stick with liquid ETFs. You want to stick with leaders, and not saying oil's a leader. Oil's been obviously a laggard for a while, but there could be an opportunity to buy the open in oil or wait for 30 minutes, trade versus that, just for an active scalp. But I don't think it's going to be anything too compelling.
Do you put a lot of orders in off the open? Like if it looks like your levels are going to come into play, do you put some opening only orders out there? Do you like to wait 2 to 3, 5 minutes? Some people wait 15 minutes. What's your trading style off the open?
Well, it depends on the day, depends on the situation.
Hmm.
I do have multiple accounts. I have a swing account. I have an active account. Depending on, what type of trend or what type of trade it is, sometimes I'll put some orders at key levels in my swing account, so I have them there. So if they get there quick, they get executed, and then I trade my active account. So something like today, I don't see anything that I'm just going to be putting open orders into, because I don't know if, just say that 205.33, holds on the spiders. It might not. So, but maybe in the course of the day, if I were to leave and that's been holding, maybe I would put some orders in if it trades below, with at certain levels below, just in case they do one of those air pockets where it trades below the 200-day and goes down to like maybe 204 or 203.55. I would do a scale in depending on if I thought that dip was viable or not, and then put a stop below a level it shouldn't get to. But sometimes orders in beforehand, if you think you're going to be too busy, are fine. But every open is different for me. Sometimes I'm looking for a breakout trade in a stock that is acting well, and I'm jumping out of my skin to buy it. I'll be buying a pre-market. Or sometimes you want to wait till it gets above the level, holds above the level, shows you that it's confirmed, and then you do it. Every situation is different, and every market is a little bit different as far as, especially the first 2 minutes to 15 minutes to 30 minutes. And sometimes what I would say is you wait a little bit, because the last thing you want to do is get involved early, and then all of a sudden you think you're wrong, you lose what you're allowed to lose for the day, and then your thought gets confirmed later, and then you miss out on your play because you were too antsy and you got in the first few minutes.
Scott, I would love to switch gears and ask you about something that you mentioned in your morning note, and I haven't seen a lot of people talk about Chinese markets. I mean, they have, the government's been putting all these measures in place. They've halted IPOs. Brokerages and fund managers are going to be buying about massive amounts of stocks. What are you seeing in Shanghai's stock market right now?
Oh, what's it off the highs? It's almost 28 to 30% off the highs. Um, but it also doubled in a year, so it's definitely in a trickier spot. My 2014, 13 note, said perhaps accumulate the FXI for a breakout above 42 on the weekly and monthly chart, and then it did happen and it went parabolic. Above, that's the side went above 50. The Shanghai was above 5,000, and I was like, you can't buy it now. The move's been too drastic and parabolic, and the rule we have is do not chase parabolic moves, even if you missed it. So if you wanted to buy when the Shanghai was 5,100 or 5,000, which everyone was talking about it on TV, well, now it's at 3,600, probably a better entry. It's still not, you have to have a strong stomach to do something like that. So I would say if just say you have a portfolio manager out there and you have that little circle of where that puts some money, maybe call up your guy and say, put a little bit into mainland China here after a 25-30% move off the highs and do it that way. If you're a trader like me, I think the FXI is getting to the 200-day. The 200-day on the FXI is right around this 44. If that holds, maybe it's a decent entry, for some type of swing trade. But the problem is obviously, Asia trades overnight, not intraday, so you don't really have much control once you put the trade on for how it's going to move. But down here, where it broke out from, if this market's any good, okay, the FXI, in my opinion, needs to hold between 42 and 44. If it doesn't hold between 42 and 44, then some of the fears that the Shanghai is like the NASDAQ back in 5,000 could come into fruition. But the jury's out on that for me for right now. I think this pullback to this area is more viable than shortable.
We're on the line with Scott Redler. He is chief strategist at T3 Live and T3 Trading Group. Scott, we just have about 4 minutes left here. Just love your take on a few individual issues here. Let's go high beta tech with the highest beta and the most expensive. Well, not the top component in the S&P. Apple. What's your take on Apple today?
Well, Apple has not been anything special. It's been stuck in this range since actually February. I think it was downgraded today. I'm not sure about who, but I saw the note earlier. Sometimes on a day like today, you see some flight to quality, and money might want to come to Apple. But with the downgrade and with the below the moving averages, you don't just blindly buy it. Going to see if 124.53 holds. That was last week's low. If that doesn't hold, though, and we have a trend down day in Apple, that could probably give us some pressure in the overall markets, because in the next real level in Apple, it doesn't come into about 122. So I feel like, Apple's something to watch as far as, does it come off lows, go green, show relative strength? If that's the case, it'll be hard for the bears to get a lot of traction today. If it does open up down $1 and doesn't rally and then breaks last week's lows, you'll probably see the Qs go lower and play some catch up, and then sentiment overall, it's like, when the most fundamentally rock-solid best companies out there can't rally, then I think that we could see more downside action. So I'm going to watch that pivot and see how it handles it.
Tesla, I mean, they actually sold a couple thousand more cars than expected. Got an upgrade, I believe, last week, moving up here. Time to take profits yet in Tesla, or let it run until we get to all-time highs?
Well, it depends when you bought it, and it depends on your time frame. Back in April, remember we were talking about when it broke the descending channel and then reclaimed the 200-day. That was when you put on a nice swing trade between 207 and 215, and then if you're a trader, trading it for pivots, it's held above the 21-day ever since. I know Thursday was a little bit of a tug of war between Citron saying that news wasn't really relevant, and then you have one of the best investors out there like Barron saying he's in it and he thinks that it's the wave of the future, and obviously we're right back to all-time highs. As a trader today, I think some guys are going to look at it to go from red to green and show continued strength. I'm probably going to do the same. For it to keep its momentum, I would think that like 268 to 272 needs to hold. That's the 8-day. It's a little extended from it, so the market's going to be really weak today. I doubt that Tesla's going to be able to be up $2-3, but if the market's going to pair some losses and be down, pretty modestly only, Tesla and maybe even Mobileye are the two names that have been showing the most relative strength lately. Is there, I guess, the wave of the future for driverless cars and different types of fuel / protection, because that's the market that two of them are trying to get into.
All right, one final one for you here. Netflix has come off the highs quite a bit. Looks like we're trying to find some support here. Enough of a pullback for you to get interested in Netflix?
If anything, just a day trade. It's one of the names that could go from red to green today. It lost momentum when Icahn said he sold his shares today that it's, announced the split. Still, relative strength-wise, it's still above the 21-day. It still looks okay. That and Amazon, I feel like, are the two names that are kind of still in their upper ranges, need a little bit of time, but are more constructive versus bent or broken, like a lot of the other names out there that that have fallen off the list.
We've been on the line with Scott Redler. He's chief strategist at T3 Live and T3 Trading Group. He joins us every Monday to give his outlook on the market. Thanks a lot, Scott. Go get him. We'll talk to you again next week.
Thanks for having me. Good luck.